Forex trading can be a minefield, and so many traders struggle to figure out how they are going to become profitable. It's just failure after failure, setback after setback, and it seems relentless. And the truth is, the statistic that states that only 10% of people are profitable, 90% of traders fail, is most likely wrong. The reality is, most traders quit before they ever find profitability. And in this video, I'm going to be sharing with you 3 tips on how to become a successful Forex trader. The first thing to understand about the Forex industry is that there is no chance that you're going to get to a point where you win 100% of the time. You are always going to have losing days, losing weeks, losing months, and on occasion, you're going to have big losing streaks that cause you to blow accounts, fail challenges, and lose your funding with firms. This is a process that every single trader has to go through, no matter how much experience they have. Some of the best traders out there are still to this day blowing their funded accounts and going on these crazy losing streaks. You can't escape it. There is never going to be a strategy that you can adopt that is going to have this magic 100% win rate. There is no holy grail. And once you are able to get your head around this idea and you're able to just accept that it doesn't matter that I lose, all that matters is how you handle the loss and whether or not your risk management strategy was able to keep you safe when you had the loss. Once you are able to get over these fears and these negative emotions that come from each and every loss that you have, you're actually able to start finding the lessons within each of the losses, and you're able to start making improvements that help you progress as a trader. It's going to take you a lot of time. For most people, this doesn't happen within the first 6 months. We are going to have to stay in this industry for 1 year, 2 years, maybe 3, 4, 5 years before we find consistency, before we're able to become the disciplined people that we need to be. Tip number 2 is going to be to learn to manage risk in all of its aspects. Most people that have not been in the prop industry before, people that trade personal accounts, will most likely have never even heard the term risk management, especially being retail traders trading on their personal funds. For most people, it's almost just like a gamble. They open up an account, they'll throw $100, $200, however much they feel like they can spare at the time, and they don't even put the education in to understand things like lot sizes, etc. So they're just placing trades without any real understanding of how much they may win or lose in a trade. And if you're trading like this, this is the biggest reason that I see from new traders as to why they fail in a few hours sometimes, but almost certainly within a few days or within the week of them taking on a challenge or opening their account. The way to combat this is to start getting educated on position sizing and on risk as a whole within the industry. As a rule of thumb, most successful traders will tell you to not risk more than 1% per trade. But if you want to be conservative and have more chance of survival in the markets, then you should probably aim for something like 0.5%, maybe even 0.25, until you get really comfortable that your strategy does actually work and you actually get that experience trading it on the live markets. So many people come off the back of demo trading where they have been hugely successful. And this has been something that I personally have experienced myself. Before I first ever traded with live funds, I had a week straight without taking a loss trading crypto. And this gave me a real false sense of security about how it was going to be when I stepped into the live markets. And again, up until this point, I had never learned risk management. So each one of the trades that I won was just a random amount of money. There was no risk to reward ratio that I was aiming for. And for the most part, most of the trades probably didn't even have stop losses because I wasn't really concerned how much I could lose because it wasn't real money. When I deposited my first $100 into my brokerage account, I lost it within about 6 hours because my first ever loss happened immediately after this big winning streak. And I had no idea how to handle it because that first loss was about 6-7% of my account. I'd closed it out manually. I didn't really understand again how to actually calculate the risk. Since then, my trading has improved drastically. I can't yet say that I'm a profitable trader withdrawing on a weekly, bi-weekly, monthly basis, but I can say that I've completely stopped blowing accounts. I have even managed to go from being in 8% drawdown to coming back to break even, which anyone who has been in deep drawdown will know that is an incredible feat. And the only reason I was able to do this is because I was able to properly manage risk. The final tip I could give you on how to become a successful and profitable trader is to master your trading psychology. And there are loads of different aspects that you will need to be aware of and you will need to master in order to improve your trading game in terms of psychology. There are, of course, things like fear of execution, lack of confidence in your systems. There is greed. And in fact, greed is probably one of the biggest things that gets traders, along with desperation. And they go hand in hand with each other. The best trading strategies and systems out there are completely useless if you do not have the correct trading psychology to be able to execute consistently without emotion every single trade. So to recap, the 3 tips I would give you to become a successful trader is 1, to understand that losses are going to come. There is no way that you can avoid them. You just need to learn from them and you need to be able to move on so that you can progress. Secondly, you need to have a full understanding of risk management, what it is, what it means, and how you can implement it into your trading. Capital protection is always just as important as capital gains. And finally, you need to have an iron-tight trading psychology where you are disciplined, you are consistent, you understand how to manage your emotions, and you are able to get rid of some of these negative psychological traits such as fear of execution and greed. If you are able to master these 3 areas early on in your trading journey, there is no telling how far you can take it in this industry.